Today, at JSA, we are fortunate to have Suraj. Just to introduce myself, I'm Arka Mookerjee, lead partner at capital markets at JSA. Suraj is the managing director and TMT head, infrastructure head, and a lot of medals he wears on his proud chest. More importantly, he has set up the Invit and Read practice in Axis, and he's a sought-after banker, which all IPO bound companies, investment bound companies, look up to him for his advice. Suraj, thank you for taking the time out for this wonderful conversation in the middle of March 31st. We are all closing. So Suraj, I will just jump into the segment. First question that the street is asking, what is the outlook? Where are we? Where are we going? There are so many discussions, there's so much of noise about international tariffs, But me and you on the ground have seen so many kickoffs happening yet. DHP is being filed. So what is the way forward, Suraj? What do you think?
Thanks for having me, Arko. I think preparation for IPO hasn't stopped at all, as you and I will attest to it, right? What's happened is a break in the market. We have seen even such kind of breaks, even the best of bull markets. 2024 IPO run was not comparable. It's not comparable to 2021 IPO run because 24 IPOs still happened at a good valuation. Was not an expensive valuation.
Right.
But a lot of FIIs participating, even though they were not participating in secondary markets. 21 was very, very different. So people are conflating IPO valuations versus secondary market valuations. Secondary market valuations are expensive. IPO markets valuation were not expensive. At the same time, it was definitely premium to the private market valuations. That's why a lot of promoters, a lot of financial sponsors decided to go for an IPO instead of doing an M&A or a private equity transaction. So my sense is once the tariffs if we get a hold on what's going to happen, at this point probably people are more concerned about what could happen rather than what's going to happen. Once we are past the April 2nd deadline of tariff announcement by the US, I think we'll have landing in the market. I think some of the best IPOs which we have had on our plate in our history are actually waiting to come to the market.
Right.
And some of them are very large. $600 to $1 billion kind of mandates are plenty. This never happened in the Indian markets ever. So I can speak for Axis Capital. We have never exited a financial year with this kind of order book in place.
Wonderful.
So from that perspective, if we get a good 6 to 8 months of markets where we don't have volatile markets, I think next year is going to be probably better than last year. But we just need to have that stability in the markets for good deals to go through.
Absolutely. Our regulator SEBI has always been proactive, and at least in my personal way, and I think we share the same thought that they are the most dynamic regulator in the world. I would like to think so. In terms of the amendments that they come up with. So SEBI has taken a lot of measures to ensure that the market remains the way they are, including some of the ICRA amendments, some of the outreach that they have sort of looked into. The ICRA amendment we saw that the rights issue has been deregularized. That has just helped the promoters raise money in a record time, something akin to a pref allotment, and rightly so because in listed companies you're already governed, so that should not be a cause. The other important aspect we have seen is the voluntary disclosure of pro forma financials, which gives the flexibility and the ability of the issuer to come out with the story that they want to share. Third, to my mind, will be the SARs and the ESOPs. It's still under consultation, but promoters have been allowed to have ESOPs in the nature of SARs, etc. So from a commercial standpoint, Suraj, how do you think what SEBI's role is, how SEBI has enhanced the role, and you have seen almost 2 decades been with the regulator. So it's over to you for your views as how SEBI has enhanced the market in some sense.
I think we are getting towards how the Western markets have always operated. I think we were a bit behind, say, 15 years back, and now probably we are sort of getting into a phase where the biggest IPOs are happening in India.
Right.
India is probably the second largest IPO market in the world
after
the US, right? So from that perspective, we are in a very, very different situation. I think our regulator has been very proactive, I would say, in terms of what needs to be done. I think a couple of things which probably SEBI can help the markets out is with the volatility, because new companies, when they get listed, the price discovery process happens on the first day, but sometimes there is what we call euphoria on some stocks, and they get to a level where it becomes very difficult for them to get back to a more fundamental valuation level. What happens in the first day should have no bearing on how the stock should be trading. But what's happened is the circuit limits after the first day gets fixed, and then it becomes very difficult for the stock to move either way.
Yeah.
So from that perspective, probably something like an accelerated circuit limits for the first 3-4 months after listing will help some of these good companies sort of to get their fair value. I think what's happened is sometimes the stocks go too high or too low depending on how the secondary market mood is, and then you're stuck. You're condemned to be in that same circuit limits for a while, and even follow on fundraising, say 6 months, 1 year later, and these companies are stuck because they can't give discount more than QIP regulations and stuff, more than 5%. So we are sort of stuck. I think that would be one good thing. Some of these stocks can find a fair value once, at least it takes 3-4 months for companies to find the fair value.
Absolutely. So on that note, Suraj, do you think that the FPIs coming into the market, RBI increasing the thresholds that we have seen and SEBI being in tandem, will that in some sense you think better the valuations, bring more stability in terms of valuations? Or do you...
I think FPIs come into India, go out of India, not necessarily because how Indian economy works, it also is global factors, right? And what we have seen is because the Indian market is far deeper than what it was, say, even 3-4 years ago, we are having our IPOs without really worrying about how much of the FI money is going to come in. But of course, good FIs coming in will always enhance. There will be a fight for good stock. Probably the stock will find a better valuation. But our expectation is once the tariffs get
clarity on that?
Clarity on tariffs come through, we will have more FIs coming through. FIs were always coming to the primary market. The secondary market is where they were sort of going out. The primary market FIs found it cheaper. Even now, probably after the market correction, probably it won't be true. But 2 months back, the cheapest way of entering Indian market was through IPOs. Yeah. That's why FIs were coming in the IPOs and not in the secondary markets. So once I think we have had good correction, and once we have some good numbers, GDP numbers getting reported,
right,
the company financials, we expect green shoots in the BFSI, green shoot in the consumer side of it. All these earnings come through. We would expect the FI interest to come back, and hopefully we'll have them back in the Indian markets.
Right. So you believe in your view that FPIs and DIIs, there should be a good, healthy, balanced mix. For the market to grow and to have a good valuation.
Certainly.
Okay. I think one of the as per me, one of the good measures from a pure regulatory aspect would be SEBI's high-level committee that they have set up for the corporate governance. I think that has been a game changer, according to me, where international investors have a lot of faith in the corporate governance and board-driven companies. It's not only single promoter, family-driven companies where that is always going to be be the case. As far as India is concerned, but that committee for corporate governance has really been an investor confidence.
Completely, because what we have also seen is the disclosure norms and how the companies are going towards corporate governance. Influx of foreign capital, most of them are private equity invested, so they have had that 2-3 years before the listing. Previously, the companies used to sort of come directly into a public market, so the preparation was always sort of not up to the mark. But we are seeing more and more companies, they know what they are doing. They have a team of good CFOs and company secretaries. So what we have seen is the compliance and the governance framework is far more enhanced.
Right.
The amount of teaching we have to do, taking company to the public markets is far lesser than what it used to be even 4-5 years back.
4-5 years.
So that is definitely one good thing. Second good thing what we have seen is this listing of subsidiaries of foreign companies is a very good thing for the Indian markets. I think that's also giving confidence to people. People are able to list, people are able to take the money out of India. So people used to ask how easy or how difficult it is to sort of do all those.
Right.
Confidence has come in that India is there, sort of very investor friendly. So we are having a lot of conversations where India subsidiaries of global majors are looking at listing. We would never have thought that this day would come. Because I clearly remember even 4-5 years back to the tech companies, we used to sort of ask them to list in India, but they thought US is the only place to list. That has completely changed.
Yeah.
So many companies are reversing their jurisdiction to list in India. And now we are having subsidiaries of the foreign companies listing in India. I think from that perspective, the Indian market is deepening. People think that actually the market is deep enough for people to get an exit because private equity have a finite fund life. and people are confident that public markets can give them a complete exit instead of going the M&A route.
Yeah.
So all this confidence has built over a period of time. Right. I think we should just have to capitalize, get more and more good issuance out of the way.
That brings to my next topic. I think we all discussed that BFSI has been slightly muted in terms of its performance. But which sectors? I mean, we all know renewables, green energy has taken the cake, if I may say so, in terms of the sectors, the 2B sectors, and that India corporate things to be. What all sort of sectors, according to you, Suraj, you think? We all know tech, we all know green energy, we all know renewables. But what are you seeing in the market? Like, where are the pitches coming from?
So my sense is the tech pitches haven't stopped. I think a lot of unicorns, a lot of very well built companies, very well built profitable companies. I think there's a very important difference between the tech boom of 21 to tech boom of 24, 25. We are seeing profitable companies coming through. So which I would think it should hit the capital markets as soon as the market stabilizes. So tech is going to be there.
Right.
Consumer tech, enterprise tech, the entire fintech, I think you would see good companies coming through in this space. Then of course, renewable, we just scratched the surface. We had a couple of IPOs, but some of the best run renewable companies in the renewable value chain, we probably will have all of those IPOs coming through this year.
Right.
It's a long time coming because infra IPOs haven't happened in a long period of time. The testament to the stability of the economy that we are actually seeing. People are willing to sort of put money in infra companies. The other sector which I think will probably have is IT services. I think we haven't had IT services fundraising in a long period of time. Relisting of Hexaware is a very, very good omen in my book. I think we will have more IT services companies, analytics companies coming through for India listing. I think on the pharma healthcare space, of course, you will have some of the good hospitals coming through. Pharma, I would think with the tariffs and everything in question, probably export stories will still have to wait for some more time, but any domestic formulation stories, you will still have some of those IPOs coming through. BFSI, there are green shoots. Probably some of the very good companies, or maybe some of the companies which have to list because of regulatory requirements, those will come through. But BFSI, I would think primary market activity will probably come in the next financial year, this financial year. I think these would be the sectors, I think. Yeah.
And just to add on to, I think subsidies do play an important role in the green sector as well. I think that should also drive the market in some sense. Going on to the REITs and limits, I know it's mine and your passion topic. I would think we did the first InvIT for IRB back in the day, and then we done several. Road sector has been dominating force, so has been some warehousing. But where do you see the InvIT culture, the culture which we talk about, business trusts offshore? I think that's been sort of, help the developers strengthen the balance sheet, taken the debt of the company. It's sort of created a lot of infrastructure in the country we've seen. So where do you see the InvIT portfolio going from here?
I think credit where is due. I think when the regulator thought about this product, I think none of us have really thought about it. We have only seen it in Singapore and the US.
Yes.
And the regulator has been very helpful. I think all of us, the lawyers, the bankers, the issuers, the investors, and the regulator, together have developed this market, right? And where we were 6 years back to where we are now. In fact, yesterday we announced the closure of 8,000 crores raised for NHB.
Yes.
And EPFO participating in it. It was a great outcome for everybody.
Yes.
I was just doing some calculations. This financial year, we will have done close to 39,000 crores fundraising, equity fundraising in InvITs.
Wow.
Across InvITs and REITs, of course.
Yeah.
This is by far the highest.
Yes.
My sense is this will go the public route. We have all been doing more private than public.
Yes.
But I would think more public InvITs should come through. Everybody who went the private route wants to go into the public route. And I also think that it's a very good instrument for retail HNI shareholders.
And just to bring you there, I think SEBI sort of lowering the limit for the minimum minimum bid period, minimum bid size, minimum applicant size. I think that is a positive move for retail to come in, because that is where the product, I thought, when in Beach May, when we were doing the middle, a lot of private placements happen. I was sort of feeling slightly, why can't retail take advantage of this product?
Because retail doesn't have access. The corporates will have access, the large investors will have access. It's a double-digit return.
Right.
Counterparty risk is minimal.
Yes.
And the infra story in India,
Yeah.
I think the retail public should get access to it, because otherwise the only other alternative in fixed income for them is a fixed deposit.
Fixed deposit, which is not here.
So from this perspective, this is a very good product for retail investors. I think that has been identified. I think which the mutual funds have also identified. Now that most mutual funds have now
Are investing into it, yeah.
we only have 1 or 2 mutual funds participating in 2018-19 when we did the first InvIT. REITs people are still okay, because REITs has this capital appreciation as part of it. InvIT is a bit more of the fixed income kind. People took time to sort of get acquainted with the product. But now every mutual fund is also on board. But we think at least another 20 to 25,000 crores of public inward fundraising should happen in this financial year.
But do you think better taxation program by the government, and more importantly, clarity on taxation, and not too much of movement and too much of unpredictability there, can have better yields?
People are very clear. Now it's a pass-through structure. So the marginal rate taxation for each kind of entity who is owning the unit. So to each is owned, the company will have 25%, individual will have whatever, 33%, 35%, whatever that number is. So I think there is enough clarity. I think from that, I don't think taxation needs to be changed or altered for investors to invest. We just need to get good quality assets in a public index. Once people start seeing how good it is, I'm sure even the investment managers, the investment advisors for public will all ask them to put money in this, because if you get 11-12% kind of a HTM IRR, which is a long-term equity story, is also not far away from here. Yeah. So for any retail investor's portfolio, this is a very good product. I think from that perspective, and what I understand is US, I think InvIT, there's no concept of InvIT there.
Right.
Everything is a REIT. That turns into trillions of dollars.
Yeah.
So we are just scratching the surface in India. I think this is a product for, I would think, for the next 30-40 years, as infra in India is building up, and they require financing. Public market would be the way forward for the entire infra financing basket, I would think.
Sure. So just before closing, since we are, we always want to talk to SEBI through our podcast and video. So my wish list to SEBI, one of the points is that let's get clarity on the promoter identification. I think there are too many regulators, too many papers, too many sort of conversations around it through informal and formal sources. I think that's something. It's I know Indian capital market is slightly unique in terms of being run by the promoter driven. So that is where I, as a lawyer, would have to have a concise answer to which we can give our issuer clients who is a promoter. So I think that's some work needs to be done there. But Suraj, over to you. And from a commercial perspective, for Mr. Chairman, what is your wish list?
Our wish list for the new SEBI chairperson is if they can be a bit more lenient with the objects of issue. I'll tell you why. In these kinds of markets, when company has filed the document and there are no IPOs to be done, some of the business plans of the companies go awry.
Working
capital, acquisition financing, a lot of things do change.
Yes.
And if there's a way where we can do some bridge financing through various means, and those bridge financing can be repaid through proceeds of the IPO, and those changes can be done between the DRHP and the UDRHP or the RHP, would be a great addition to the Indian markets, because in good markets, IPOs happen very fast. In choppy markets, you would have those gaps, and always these companies are in a dilemma because they have spent time and effort to file the DRHP. They have to change the objects of issue, they have to withdraw the document.
Just to add to that, I think you mentioned tech companies are here to stay. And so I think working cap and customer acquisition would be two key, apart from the offer for sale and the exit that they give to their PE investors. I think from the fresh issue point of view, I think working cap as well as customer acquisition could be important objects which they should look at.
I think the new age technology companies have this. They're unique in that sense. They are, and working capital is required because some of the manufacturing companies they're growing so fast that the working capital is required.
Yes.
I think if that can also be considered, it will be great. I think objects of issue would be our single flexibility. There would be a single biggest request for SEBI to consider favorably from our side.
Also, SARS coming into the MPC calculation proposally. Yes, that's for new tech companies again would be a game changer. I would think so.
And of course, the other two things which are actually they're trying to resolve it, deemed public issuance.
Yes.
With the number of pre-IPOs happening in the markets, it's out of the company's hands to sort of control the cap table. And so if there can be
in that context, it needs to be relooked at. That Companies Act marrying SEBI regulations, that needs to be slightly clarified and relooked at.
These are very good companies. I think some of them are stuck for no fault of theirs. I think if that can also be resolved. And the final one, I think SEBI has already taken the first step there, is ESOP to promoters. Not having to convert it at the...
Yes.
No new ESOPs is perfectly fine. Existing ESOPs, if that can be managed, because most of them are first generation entrepreneurs.
Absolutely.
So for them to excise the ESOPs is very difficult.
Should be encouraged.
But thanks to the regulator, actually they have considered that and they already released a discussion paper. If there can also be sort of fast forward, I think it would be a great help for all of us involved.
Thank you, sir. I think this conversation can go for hours, but of course, we would want our viewers to have a focused view on what we think and our message to the regulator. Thank you, Suraj, for being there. And again, while corporate India is closing their books, we discussed, what's the way forward. Thank you so much, and glad to have you.
Thanks a lot.